You're watching Stockwatch. I'm Simon Brown. Joining me to unpack your stock-related questions today, Ricus Reeders from PSG Hole-in-One Ruimsig, Nader from Benguela Global Fund Managers. Be sure to send your questions through email, stockwatch@bdtv.co.za, SMS 41392, or on X @BusinessDayTV using hashtag Stockwatch. Gents, thanks for joining us today. A ton of results. I want to get to some of those. Grant, let's start with you. Let's start with PPC. It's still a tough environment, but the operational update, I thought, not bad. The market's certainly marking it higher this morning as well. Is there anything there, or do we look at the bigger picture, which is there's no activity, so thanks but no?
Simon, no. I think we can look at the bigger picture. I didn't look at this particular update, but I have been tracking the last couple, and they are building some operational momentum. They're doing that strategic partnership with that Chinese company where they're going to share technology and IP, and I think that's a very good move. I think they're using very old tech there, and there's opportunities. And I think the macro is improving. I think the infrastructure rollout in SA is going to improve, and I think PPC will be a beneficiary of that. So I certainly think you can look at the macro on one like this. In fact, I think you need to. So even though I didn't see that particular update, I think the story is improving at the margin.
Yeah, I'd forgotten about that deal with China, the Western Cape plants to improve efficiency. Ricus, PPC, I'm looking at a 3-year chart. It has gone nowhere. You're about 10 cents up in 3 years.
Yeah, PPC. Years ago, and I'm talking, was it about 2003, 2004? They had this massive expansion overseas. And we took a look at it and said, well, in order to get any earnings from this, from that expansion was going to be, almost impossible. And that's what it turned out to be. That being said, they've certainly got rid of that legacy. They are in a turnaround situation. I still think some of the plants are probably in the wrong place. But as Grant just said, with this kind of deal making, they have an improving technology. It certainly looks a lot better than it did 20 years ago. And certainly the price over the past year and a bit has been showing you that this is possibly a turnaround situation. I don't think a cement company is ever going to be great business because it's highly cyclical. We know that. Of course, if we do see some infrastructure spend, that'll be great, and PPC will run, especially now that they're far more efficient and leaner company. Market liked the results this morning. I don't know what the percentage is. I just had a look at the graph, and they've certainly, they had a bit of a downtrend since the previous 6 months worth of results, and it's picked up very nicely. So I would still consider it a trading stock, possibly for your stock picker type of guy. I won't include it in the portfolio because clients don't like that kind of volatility. But yeah, I don't think they're in a bad position fundamentally, and price-wise, momentum-wise, it looks pretty decent as well.
Yeah, and trading up 10% on the day. The market certainly did like it. Ricus, let's stay with you. We had the Thungela trading update on Friday. Not much of a surprise. Coal prices under pressure. Transnet still a challenge. Question coming through, should I be taking my profits on Thungela? Looking at the chart, it's actually been going sideways a couple of years, notwithstanding the pressures. Would you be a buy, sell, or a hold on Thungela Resources?
Well, until the coal price shows some upwards momentum, I won't be buying Thungela because that's what that's their biggest effect. Obviously, they could get some benefit from should their railway problems disappear, and that might re-rate the share from its current level to whatever discount you would apply then. But while the commodity that they sell is not an uptrend, why should the price go up, even if they maintain or even slash costs?
Grant, your take on Thungela Resources?
Look, I think Ricus hit the mark there. The coal price is going to hang over these guys for a long time. It's a good management team. It's a good operation. The stock is cheap, but it's one of those, as we know, that can stay cheap for a very long time and can even get cheaper. So it's such a difficult market to play in. It's not a buy and hold for me. You need to get your fundamental timing right and see that visible uptick in the coal price, or Transnet for that matter, is material improvement on that. That's also weighing on them. They did well to diversify into Australia. diversify their coal and get away from all of it Eskom. I think the Newcastle is what they bought. Still a good business, but I think you've got to be careful. I wouldn't rush into that at this stage.
I mean, Grant, this is essentially a single commodity miner is always that getting the timing right. I mean, buying at the bottom, and then the second half, and often the harder part, is selling at the top.
Yeah, because that's when it looks the best. When it's at the top, it's the story's never going to end, and maybe the gold shares are like that at the moment. So one needs to be careful there.
Yeah, well, yeah, you're scaring me with my gold shares. Ricus, let's come back to you. Mondi, question coming through about Mondi. Is this worth an investment panel's view on Mondi? Your take on Mondi? They've had a bit of a tough time, and I'm going to be honest, I haven't looked at the chart recently. Ricus?
Yeah, well, they had a bit of a bounce on their results, which were pretty decent, if I'm not mistaken. Not one that I'm following very closely, but very much dependent on what happens with the European economy, because that's where most of the operations are based. And as with any packaging company, if you get good growth in your local or your regional economy, then packaging does well. And a company or a packaging company like Mondi will do very well because it's a very well managed company with, I won't say unique, but with, shall we call it, an exciting set of products, which is really, they do a lot of product development as into more eco-friendly kind of packaging, that type of thing. But, almost as with Benguela and coal, it needs a big driver, and that big driver is regional economic growth. I mean, not seeing that coming out of Europe yet, if I can hedge myself there. In fact, they had some purchasing managers index data out of the Euro region this morning, and that actually looked pretty well. But if all of a sudden we see, because of geopolitical troubles, as we all know, an increase in things like weapons manufacturing in Europe over the next 6, 12, 15, 18, 24 months, that could actually boost the growth profile of Euro economies quite significantly, and then Mondi would become very, very interesting.
Grant, your take on Mondi?
I think it looks interesting at these levels. I rate the management team highly. I think it is, as cyclicals go, it's a quality business. There is an element of cyclicality, but these guys control the controllables. They spend money well, they allocate capital efficiently. And I think what we saw in their last set of numbers was they're starting to see a bottoming out in the inventory cycle. There's restocking taking place, some pricing power coming back to them. And so they're going to start hopefully passing on some price increases, recovering some margin there. And I think they're well positioned. Yes, they need Europe to pick up, but I think Europe is at the margin going to be better a year from now than they are currently as you go into this rate cutting, as we move through this rate cutting cycle and this increased demand on spending. So I like it, accepting that it's hard to know the timing on this one as well.
Yeah. So one we do know the timing on, perhaps. Grant, let's stay with you a moment. NVIDIA. Someone said to me, and it actually perfectly sums up NVIDIA, that the market expectation for NVIDIA is that they will beat market expectations, which is what they did, and the stock probably sold off. I mean, NVIDIA it's a high flyer. We know the investment case for it. Would you be a buyer at these points? This is almost like your single commodity miners.
Yeah, that's exactly right. Look, I think if you buy the story, the bigger picture story around the AI infrastructure rollout, and you don't think it's going to be completely disrupted by, I think NVIDIA is one you can own, but I think you need to be careful. Don't close your eyes on this one because the capex cycle seems to be peaking. There are some guys pulling back on next year's expectations. So you think you're buying huge growth for 3 or 4 years, you might only be buying it for another year, and then it starts to slow down materially. So it's one where you need to be cautious. I think it's a great business. Price-wise, it's unclear how cheap you're getting it, even though it looks cheap, because that 3-year timeline may not be as exciting as it looks. Having said that, I think they are still very much the leader in that chip space. They have the moat with that CUDA software that surrounds it and the developer, ecosystem. So fantastic business, but these things are cyclical no matter how good they are. So you do need to, don't chase it.
Yeah. Ricus, your take on NVIDIA. I mean, in some senses, they are the shovel. Of course, we could go further down the line and get TSMC. We could go even further down the line and get ASML.
Yeah, you're right, and I agree with Grant and Simon. Yes, they are the shovel, but they are the only shovel at the moment. I'm worried about other shovels appearing, if that makes sense. So they
Yeah.
have the lead in chip development and all those good stories, and we're all aware of that. This doesn't mean I say go and sell it. I mean, ride this price momentum for as long as you've got, if you've got it. But my area of interest as far as AI is concerned is companies, sectors that will use AI, whether it be things like healthcare, whether it be things like banks or financial management, that kind of thing. Heavy industry, take Siemens as an example, where it's the application of AI that makes a difference in the company or the sector's growth profile, rather than, as I said, the one company that's got one pick at the moment, and that's their advantage in chip manufacturing.
Yeah, I take
Or
your
chip
point.
technology.
Yeah,
Yeah.
and it's a great pick, but it's just that one single one. Quickly before break, Ricus, let's stay with you. We had some JSE numbers out. Question was coming through. The point was surprisingly better than expected, perhaps. I mean, the JSE's, well, it's no longer the monopoly it used to be, but of course, volumes are down. We can buy globally. Ricus, would the JSE be on a shopping list?
But it was just pre the national election. I had that as a stock pick, saying that it doesn't matter whether it goes well or badly with what happens with the JSE, the JSE will benefit, and they have, not so much in their traditional equity business, but certainly their. I don't think you can describe them as their secondary businesses anymore. But things like data selling and services, and also derivatives markets. Behaved as expected, considering that doesn't matter whether the election news was good or bad. People used, or people traded on the JSE. It came through. What was nicely surprising was their cost management, because that's always bugged me that the cost of running the business, and that means people and systems, at times detracted from the earnings. And this time around, I think they limited that to about a 2.5% increase, and that really flattered the numbers. So great result. Price-wise, it's had a magnificent performance over the past 12 months.
Yeah.
It's gone a bit flat, I think, in anticipation of these results. So I don't really have a buy, hold, or sell at the moment. I mean, I had to buy 12 months ago. But yeah, great set of results.
Yeah, I mean, up what, more than a third since those lows just ahead of the elections last year. Grant, your take on JSE, that it has had a spectacular 12 months, although it has back to kind of where it's been for much of the last 5 years.
Yeah, exactly, Simon. I think they have had a good 12 months, but bigger picture, they've been a company facing a zero growth environment. In fact, a declining market, as the JSE seen delisting after delisting. I think Barlow's has been saved for now, but that's just another one. So I think they've done a good job to diversify where they can, but in the absence of an improving economic outlook and a sort of uplift in this country and in the investor sentiment, they're going to face the same old headwinds they've always faced. Where do they find growth? So as much as they've done a reasonable job around that, for me, it's unfortunately almost a macro play, this JSE. You need to see a pickup in interest in small caps, a pickup in foreign interest into our market, which we have started to see, in fact. And you need to see some listings coming onto the exchange rather than just going off. So it's a tough one. I like the business, but I don't love the investment.
Yeah, okay, got you on that. True's results late or mid Friday afternoon. The retailer updates in all cases when they were coming through Jan, early Feb, the update would seem okay. It would sell off because of what the prices had done last year. The True's one, Grant, looked a little bit, it looked bleak, quite frankly. Your take on True's? I mean, is there an investment case here, or is there a better clothing retailer?
Yeah, I mean, it's not my favorite pick, Simon. I think they've struggled to invest for growth. In fact, I haven't seen any real investment for growth for years. No new strategy and innovation the way at least TFG is pivoting. They're trying to, they've built their platforms. Mr. Price has been aggressive in making some acquisitions. So For me, I don't see how this company grows. It's just so focused on return on capital, but there's no growth. So it doesn't excite me. I think the peer group updates so far have all been better. They've all showed a much better top line. And so it's just more of the same for Truworths. And I think it's not a stock I would pick. I'd prefer the other retailers.
Ricus, Truworths?
Precisely what Grant said. I think if you want to play the South African retails or clothing retail space, my personal preference is in Pepcore, but whether it be Mr. Price or the Fashini Group, I think all three of those better than Truworths. And yeah, it's because of where's the growth going to come from.
Yeah. Well,
I don't know.
I mean, Itatao came out with their results. I loved it. Their fighting fit mantra. They did say that the second half of the first half, so the second quarter of the financial year, was much better. That, of course, was two-pot money, etc., etc. But market, a little sanguine, stock off almost 4%. Ricus, Itatao, I mean, we all did all those upgrades back in the pandemic. Maybe we now need to replace some towels, but it's not showing in the numbers much.
No, it's not. I mean, it's a well-run company. Let's not forget that. And basically having flat earnings in an extremely competitive environment, as they say themselves, facing cheap imports from China with no protection as far as tariffs are concerned. Cost pressures, we all know about that. I mean, they had to relocate some of their stores to get them into a safer environment that gives you the idea of not only cost-wise, but how difficult the operating profile is. So under the circumstances, kudos for having those results, but unfortunately not something that I would invest in right at the moment. For that, again, we need local economic growth and people not merely replacing stuff, but actually building and developing.
Yeah, and that's a fair point. And we had the F&B residential survey in terms of plans passed. And maybe we're bottoming, but the December number year on year was still negative. Grant, Itatao?
Yeah, again, as Richard said, it's a well-run business, but you don't replace your tiles or do major renovations every 3 years. So I think the post-COVID recovery is going to take longer than we would expect. And it's still playing out. I don't think we've bottomed yet. And in the absence of an economic recovery, yeah, it's hard to get too excited. You're back to below or around 2019 levels. So over 5 years now, including COVID, you've only just made your dividend out of the stock. So it's a tough one, and it's in a fiercely competitive environment with low growth. It doesn't excite me, even though I acknowledge it's a good little business.
Yeah, and that's often. You might have we see great management, but sometimes the environment is just completely against them. Grant, we had sometime results out. I thought they looked fairly good, although I think the market was expecting some good numbers. Stock slightly under pressure today on what's otherwise a very green day. Sometime for you, short-term insurers. I like their ability to reprice quickly, but of course they've got all the challenges. I mean, as we speak, floods down in KZN.
Yeah, exactly. I think the short-term insurers have been in a bit of a sweet spot over this past year and a half, and they've all done well, but margins are hitting the upper end of the ranges. The underwriting margin sometimes delivered really nicely on a shareholder return point of view. But I think it's getting sort of full here, and I don't see, typically these things are also cyclical, these returns, these margins. So great business, well run. I think it's steady as she goes. I would argue only maybe OUTsurance looks a better business, but that's also not cheap. So yeah, I wouldn't buy Santam here purely because I think it's had its run, but it's a business you can own for the long term if it gives you a chance, for sure.
Ricus, I mean, again, looking at the chart, I mean, it was a post-election run. It's up about a third since the election in May of last year. Ricus, your take on Santam?
Yeah, I think it's at the top end of its range in anticipation of the results that we saw. Fundamentally, as Grant says, very well run. Geographically, probably a little bit more limited than something like OUTsurance, which is, I think, where the excitement comes from in OUTsurance. But it's a great dividend payer, so if you can get it at a lower price for your longer term sort of steady performance, I'd do that, but not at current prices.
So then RCL Foods had some numbers out today. Here's another stock that's doing nothing. I got to say, the numbers looked actually not so bad this morning. The market is liking it again in a very strong trading day. Ricus, RCL Foods?
Not something I follow very closely, but the impression I'm getting from is obviously that what defined them, the chicken side of business is becoming less, and they're moving more into your general food producer environment, and that probably would give the company a bit of a re-rating. But yeah, I'd hesitate to say anything further because I really don't follow the company.
No, fair shot. Grant, do you have any deeper insight? It's also, I got to be honest, not one I follow that closely.
Yeah, no, me neither. And I think if I was going to play in the food space, I wouldn't be picking this one. I would lean into, well, your AVI is a better quality business, but I think Tiger Brands is actually looking interesting with the new management there. And that might be a much more visible and lower risk actual investment from where I'm sitting.
I take your point in Tiger Brands. I got to say, I was expecting, how do we put this politely, horror shows from them, and actually it looked really, really good. I mean, we're actually seeing, we always hear talk of turnarounds and the like, but there's real evidence of it at Tiger Brands. Grant, that is looking good.
Yeah, it's looking good. The difference here is you've got the CEO, Chart Kruger, he's been there, done that. He's been, the best out in the market is Premier Foods in the bakery division. They've been eating Tiger's lunch, and now he's come over, no pun intended, and he's implementing some of that cost discipline, upgrading the technology, cutting off, spinning off unprofitable businesses or less focused businesses, focusing on the power brands, but not just saying it, actually deploying capital into it to reflect that. So I think they're doing all the things right that probably were there for the taking for 10 years, but no one actually implemented. For once, you're actually seeing the implementation. So I like that story.
Question coming through, Astral, if we get an increase in the exempt VAT products, one of them was going to be poultry, would this be good for Astral? I got to say, I feel for Chris Skitter, who forever wanted poultry zero rated. He retires, they might be getting it. I don't know it's going to necessarily be giant in Astral's life.
No, I think it's such an essential commodity. The party that will benefit most is the person hopefully buying the chicken rather than the person selling the chicken.
Yeah, no, I take your point. It's supposed to help consumers rather than the companies. Let's go to stock picks. Ricus, you're going with Bidvest.
Yeah, results are out this morning, and it's interesting comparing them with Italtile because Bidvest also had about a 1% increase in earnings, which by its standards is very low. But unlike Italtile, which is literally a litany of woes, none of them making, Bidvest basically says, well, we had a surprisingly bad result out of Adcock Ingram. We're having some difficulty locally, which is applicable to most local industries, whether it be, troubles with transport or consumer spend, and specifically also their automotive sector. But offshore's going great guns, and specifically their entry into Southeast Asia and Australia, which in any event is where I think growth is going to come from. Price-wise, the company's basically been flat between about 230 Rand and 300 Rand since January of 2023.
Yeah.
They're right at the bottom of that range on these results. I think if you want a steady, local, very well-managed companies at this price point, not a bad place to enter.
Okay, that's Bidvest. And then aren't you going with Amazon?
Yes, so it's partly, it's had a healthy pullback, well, healthy 15% from its recent highs. But I think what's underappreciated is how well positioned it is to tap into this generative AI across a number of layers in the business. They're still the biggest cloud provider in the world. They have their Bedrock platform. They have the ability to sell that service to others and to use it internally. So you have this massive logistics business that is built for AI. You have this massive consumer advertising business. You have this, so everything they're doing, they've got Alexa Plus they've just launched, is really ripe for tapping into the synergies and the opportunity around. They've got their own inference chips. The list is endless. So they're probably one of the better positioned companies out there anywhere I look. And I think they are disciplined. They've got a good management team. Andy Jassy is doing an amazing job. So I'm quite excited about this one. I think for me, they're one of the better picks out there if you want to be in this space.
Yeah, and I was having a look at them a couple of weeks ago. I had not realized advertising was quite that big in their life. Absolutely.
It didn't used to be.
It didn't used to be, but now suddenly it's a giant number. But that's all for Stockwatch today. Thanks to our guests, Ricus Reeders, PSG Hole-in-One Ruimsig. He going with Bidvest. Nader from Benguela Global Fund Managers going with Amazon. Up next, the close. Stay watching.